I'm with George Latham, Managing Partner from WHEB Asset Management at the Investing with Impact Summit. Can you clarify some of your expertise in this area?
Thank you, certainly. Well, I've been involved in sustainable investing for over 20 years at Threadneedle Asset Management, at Henderson Global Investors, and latterly at WHEB. We developed as an investment strategy in the early 2000s, which was originally known as the Industries of the Future strategy, where we focused on investing in companies which were solving sustainability challenges. So the product or the service that companies were selling were creating a positive impact on society or the environment. That was the starting point of our investment strategy 14 years ago now, and still remains the core of our investment strategy today. So it's always been focused around impact, and for good investment reasons, because we believe that companies that are solving global challenges, creating a positive impact, naturally leads us to that lens, naturally leads us to companies which have strong growth in their marketplace.
Thank you very much, George. What would you say your goals are in impact investing?
Well, I think really part of it's summarised by our mission statement as a business, really, which is to advance sustainability and create prosperity through positive impact investing. So this is something that defines us as a whole firm. So over the last 6 years, I've been managing partner of WHEB Asset Management, which is an investment firm that is wholly organised around a single global equity investment strategy, and one that is purpose-led in terms of to generate a positive impact at the company level. So we are a certified B Corporation or benefit corporation as a business, and that really sits behind and aligns us with the way that we invest, which is still very much focused on that global equity strategy, looking for businesses which are creating a positive impact, and therefore the more they sell of their product, the more product or service that generates more revenue for their business leads to better environmental outcomes, and that's driving growth in the end markets for the companies we operate in. And that's what we mean by creating prosperity, i.e. we're all about investment performance. We do this because it's about generating a superior investment return from global equities, but the medium for which we do that is by looking for positive impact investments.
Thank you, George. And within global equities, where do you see the most scope for impacting investing to have an effect and to really kind of produce improvements and positive outcomes?
Well, it's broadly based, really. I mean, there's a broad basis of opportunity if you're looking at that lens of companies where they're actively providing solutions. We have 9 investment themes, which are sort of broadly focused around 4 social themes and 5 environmental themes. So we look at companies which are involved in cleaner energy or resource efficiency, in water and water management, in environmental services, and in sustainable transport, in the environmental themes. And in the social themes, we look for companies that are solving healthcare challenges, companies which are providing educational services, well-being, and safety are the 4 social themes. All of those are markets which have their own attractions, and all of those are markets where we can clearly see opportunities of companies where the product is desirable. We need more of those products to be sold to generate a more sustainable and a low-carbon society, and that's what's driving their end market growth.
Thank you, George. And can I ask what your view is on whether pension funds have to sacrifice any returns if they're using impact investing?
So as an investor, we're looking for 3 qualities in a business when we're appraising it as a potential investment for the portfolio. We're looking for companies that are exposed to strong long-term growth. We're looking for companies that are high quality, and then we're looking for companies that are at an attractive valuation. Those are the 3 factors that we're trying to get in balance. As I hope I've explained, growth we find through looking for companies with positive impact. So we want more of that. We see it as a positive investment factor. By looking at environmental, social and governance analysis and how companies approach their own supply chain, the checks and balances in their management, and how they treat their employees and so on and so forth, that leads us to quality. So we look for investment factors through a sustainability lens. It's embedded and it's core to our investment process. And so absolutely we see it as the root, the source of our investment return, and the reason why we believe we can generate long-term outperformance and superior returns from global equities.